I did a similar thing for 2024, where I recommended Amazon, Google, and T. Rowe Price Group. The three stocks performed well, but only Amazon and Google managed to outperform the S&P 500 in 2024. This year, I want to go one step further by selecting 5 stocks for 2025, increasing my risk to be wrong with at least one of them. First pick, ASML. In my latest video about ASML, I stated that the company's sell-off seems to be exaggerated. From this point, the company already returned a solid 6.5%. Growth catalysts. As ASML's unique position in the AI and semiconductor supply chain as the sole EUV lithography provider should be fueling future growth and provide stability. In contrast to the other supply chain levels like AMD versus NVIDIA, ASML's competitors are mostly manufacturing complementary equipment rather than rivalry, further solidifying their dominant position and making the company the foundation for the whole semiconductor market. Main risk. The biggest risk, in my opinion, is the high customer concentration of ASML. 3 customers, Taiwan Semiconductor, Intel, and Samsung, currently account for up to 64% of ASML's sales, making them very reliant on the financial well-being and investments of these companies. Upside potential. Assuming the average of management's guidance for 2025 and 2030, we have the following valuation. With these predictions, we had a fair value share price of $807, indicating that the company could currently be undervalued by 13%. Second pick, LVMH. LVMH has experienced a significant decline in stock price in the last 18 months. LVMH's sales growth has mostly been flat in the last months due to weakness in the Chinese market. Growth catalysts. LVMH should be able to capitalize from an increase in demand for luxury goods in China. This market segment is predicted to account for up to 40% of the whole luxury goods market in 2030. After a slowdown in 2022 and 2023, the global market is positioned for more growth in the following years, offering growth rates of 10% per year for the next years. Main risk. There has been a new phenomenon in China called luxury shame, where Chinese consumers are now increasingly preferring more discreet and long-term value products over flashy items due to economic uncertainty and social pressures. This could negatively impact LVMH in the short term, and even in the long run, if the company doesn't adapt and focuses more on quality, functionality, and subtle exclusivity. Potential upside. Assuming a top-line growth rate of 11% per year, which is right around the company's historical 5- and 10-year growth rate, we get the following valuation. With these assumptions, we get a potential upside of 15%. Third pick, 3i Group. I just recently published an article where I analyzed the business model of Action, 3i's main holding. The Dutch non-food discounter is growing aggressively and has established a presence in Europe. Growth catalysts. Action's phenomenal growth is fueled from 3 different aspects: new stores, like-for-like growth, and efficiency and scale. These 3 aspects are benefiting each other, leading to a self-accelerating spiral that helps Action grow. Main risk. For me, the main risk for Action is the cultural fit. As seen above, the company is currently mostly operating in Central Europe. An expansion to the US and UK, which is planned by the management, could therefore lead to problems due to a difference in culture and customer preferences. Potential upside. Assuming a growth rate of 25% per year, which is a bit below the historical growth rate, we get the following valuation for Action's business and for 3i. With these assumptions, we get a potential undervaluation for 3i of 21%. This analysis is only considering one holding of 3i. When also including the other 30% of 3i's holdings, the upside could increase by another 10%. Fourth pick, Google. In my latest video on Google, I stated that there might still be a lot of potential in the stock. Since then, the stock already performed very well with returning 16% to investors. Growth catalysts. Google advertising is providing solid and constant growth, while the main growth catalyst comes from Google's cloud segment. Here the company is increasingly gaining market share compared to the main competitors Amazon and Microsoft. Main risk. Alphabet is heavily investing into innovative products and services. These bets, however, are mostly high risk and are nowhere near to generate profits anytime soon. The lack of a simple and clear AI monetization strategy, despite the massive investments necessary, are also a massive risk for Google. Potential upside. Assuming the growth rates of the 2 main business segments to be at the average of the underlying market growth rate expectations, we get the following valuation. This gives us a fair value share price of $235, indicating that the company could currently still be undervalued by 21%. Fifth pick, Amazon. From my last analysis on Amazon, the company already returned 19% to investors. Growth catalysts. Amazon is operating in many different business segments. The focus segments for Amazon, however, should be cloud, advertising, and the third-party segment, as these three combine very high growth rates with a very high profitability, as can be seen in the EBIT contribution of these segments in our prediction for 2031. Main risk. The main risk for me when investing in Amazon is the excessive number of small segments and experiments the company is operating in. While diversification is important to stabilize the company and make it more resistant to potential downturns, a lack of focus makes it very hard for companies to fully capitalize the opportunities presented to them. Potential upside. Assuming growth rates and margins to be at the averages of the underlying markets that Amazon's business segments operate in, we get the following valuation for Amazon. This gives us a fair value share price of $281, indicating that there still could be additional upside of 26% right now. Conclusion. These 5 stocks are my top picks for 2025, potentially offering the following undervaluation. 1. ASML, 13%. 2. LVMH, 15%. 3. 3Ed Group, 21%. 4. Google, 21%. 5. Amazon, 25%. I'm excited to see if these picks manage to outperform the S&P 500 in 2025. What are your picks for the next year? Let me know in the comments below. I also wish everyone watching a successful, happy, and especially healthy 2025.